With respect to Brexit, first of all, I think you've seen the markets settle down a little bit over the last couple of days. I didn't follow the markets today, but we're monitoring very carefully whether there's any systemic strains on the system. And so far, what you've seen is reactions in the market, stock prices, currencies, but I think the preparations that were done by central banks and finance ministers, our Treasury Secretary, indicate the degree to which the global economy, in the short run, will hold steady. I think there are some genuine longer-term concerns about global growth if, in fact, Brexit goes through and that freezes the possibilities of investment in Great Britain or in Europe as a whole. At a time when global growth rates were weak already, this doesn't help with respect to the UK and any trade agreement with the United States. Frankly, we will be the least of their problems right now because their first order of business is going to be to address the market where they sell half their goods, which is Europe. And these things are not easily negotiated, particularly because we've been spending our time trying to negotiate with the European Union. And so to suddenly go off on another track will be challenging. But I think their first and primary concern is going to be to try to figure out how they interact with the European Union and the European market if in fact and when in fact they leave. I have emphasized throughout, though, that the special relationship that we have with Great Britain does not change. The ties of affection and family and language and institutions and culture and the business relationships that exist, those are so deep and so long-lasting. The cooperation we have on security issues and on global challenges, those are so fundamental that our relationship with the UK fundamentally doesn't change.